Welcome to Market Talk. I'm Amber Lancaster here with Paul Mampilly. Today's update is for the week of March 23rd, 2020. I'll begin with the latest economic overview, my innovation story of the week, and the latest developments in America 2.0. So let's begin. So first off, breaking this morning, the Federal Reserve has just announced a huge second wave of initiatives to help the U.S. economy. They have now signaled unlimited quantitative easing. This means that the Fed will buy treasuries and agency mortgage-backed securities in, quote, the amounts needed to support a smooth market functioning and an effective transmission of monetary policy to broader financial conditions and the economy, end quote. So per Bloomberg, quote, under the new programs, the Fed will take on a slew of efforts, many aimed at directly aiding employers and households, as well as cities and states, end quote. So the Fed will support the flow of credit to employers, consumers, and businesses by establishing new programs that, taken together, will provide up to $300 billion in new financing. And it will be backed by the $30 billion of Treasury's Exchange Stabilization Fund. So the Fed also, quote, expects to announce soon the establishment of a Main Street business lending program to support lending to eligible small and medium-sized businesses, complementing efforts, end quote. And this is from the Small Business Association. So this is just massive news breaking this morning. Now, as we all adjust and deal with the ramifications of COVID-19, I'd like to share a study produced by Bloomberg New Energy Finance, which has new data from Eastern countries that are now emerging on the other side of COVID-19 outbreak. So this could give Western nations like the US, etc., insight and hope into what we can expect in the weeks ahead. So per Bloomberg NEF, there's been a major transportation development in China as the recovery there continues. NEF data is now seeing an upturn and flight departures after the COVID-19 disruption. Their data is also showing that increased road congestion is just going on further and further as more people from Beijing, Shanghai, Guangzhou, Taipei, Hong Kong, they're all out and about filling the city roadways. And moreover, data from WeChat, which is the Chinese social media and mobile payment app with over 1 billion active users, is showing that there's been a fourfold rise in WeChat mobile payments as consumers venture out of their homes and as governments relax restrictions and soon stores are reopening. So what this shows us is with strong and strategic virus mitigation measures, this same recovery will soon be seen here in the US and other Western nations. What's also of note, we're now seeing that ETF investors are positioning themselves for a rebound in Chinese stocks. Per Bloomberg data, investors, quote, have poured $176 million into U.S. exchange-traded funds that invest in Hong Kong-listed Chinese stocks. This is the first weekly inflow in almost 2 months and the biggest since November 2018 for the iShares China Large Cap ETF. So this shows optimism is growing as for the nation that is mostly contained its coronavirus epidemic and will post a quick rebound, end quote. So where upcoming economic releases are concerned, there will be 8 major U.S. releases this week. On Tuesday, preliminary March numbers for market U.S. manufacturing will post at 9:45 a.m. and February's new home sales will post at 10 a.m. On Wednesday, durable good orders for February's preliminary numbers will post at 8:30 a.m. And on Thursday, GDP annualized quarter over quarter, third reading and wholesale inventories month over month February preliminary numbers will post at 8:30 a.m. And on Friday, personal income and personal spending for February will post at 8:30 a.m. And the final March reading for the University of Michigan sentiment will post at 10 a.m. So now for my innovation story of the week, which focuses on what we really love here at Bold Profits, 3D printing and the evolution of 3D printing and how it's needed today more than ever. TechCrunch is reporting that new 3D printed ventilators, a prototype of these, was just created in 1 week. This ventilator prototype was created by an open source 3D printing project, and it's paving the way to create other 3D printed medical equipment and supplies like much needed masks. And now for our America 2.0 update, major US companies are stepping up and helping out their employees with a cash infusion. ADP just announced to its workforce a one-time payment of $1,000 for each associate. Fifth Third Bank is issuing a $1,000 special payment to employees during the COVID-19 pandemic. CVS Health said the company is awarding bonuses in a range of $150 to $500 to pharmacists and certain healthcare professionals on the front lines, as well as store associates and managers and other site-based hourly employees. Walmart has announced plans to give cash bonuses to all of its hourly employees in the US. The bonus is $300 for full-time workers and $150 for part-time workers. Their bonus totals actually total $550 million and is labeled as a mini stimulus package. Kroger will pay all full-time associates a $300. Part-time associates will receive $150, and this goes to frontline associates who were hired on or after March 1st and will be paid by April 3rd. Facebook is giving a $1,000 bonus to all of its 45,000 employees in order to relieve some of the stress and problems related to the outbreak. JP Morgan Chase will hand out a $1,000 bonus to frontline employees. And Starbucks, well, they just announced that employees who come and work their shifts through April 19th are eligible for, quote, Starbucks service pay, end quote, worth an additional $3 an hour. So this is encouraging to see from our companies in the US, Paul, stepping up. And that's what I have to say for today. But Paul, let us know what's on your mind. We love to hear your thoughts.
Well, some incredible news there from China. And let's just start with that, Amber. I mean, many people really, even when it was going on in China, had very dire predictions for how long it would take to restart their economy, what the long-term implications are. And the data you're presenting suggests that it's a fairly quick snapback. In other words, being that there is no actual damage to the physical infrastructure of China. There's no damage to the sort of financial infrastructure. Their banks are in place. China has enough money. And so they're able to, in stages, turn back sort of the switch and go back to making things. And that's what we have told you is going to happen here, we believe. And there is no reason really to believe in anything other than that. No country around the world that has gotten coronavirus has been permanently debilitated. The worst experience by far seems to be Italy. And they've got their own very particular issues as a country between governance and how the country is administered. We, on the other hand, have done a lot of things right. We have moved to social distancing on a voluntary basis. The Federal Reserve today is coming in and saying, hey, wherever there is dysfunction, we will send liquidity into that market and we will fix that. In other words, we have learned from 2008 that you want to take action and you want to take action early and you want to take it with massive force as opposed to just incrementally stepping in just to solve the single problem you might be seeing, knowing that the first problem is often an indication of other problems. So their actions are on top of everything that they're going to do, bring even additional liquidity to other markets where people have been asking for cash and pushing the price of assets down. And so I believe that sooner rather than later, you're going to see the prices of a lot of assets stabilize. Now, Amber, for us, we have our way of thinking. America 2.0 stocks, new world stocks versus old world stocks. And I have no actual name for the old world stocks other than old world stocks in terms of, and over the weekend, I have been doing a lot of work and just simply looking at 3D printing. 3D printing really benefits from what is currently going on in the economy to the extent that more people are staying at home and working at home. And that will continue in all likelihood in greater percentage than before the coronavirus panic. Well, 3D printing is a technology that you can run from a warehouse with almost nobody in it. And it can be run remotely. And you can bet that right now, the 3D printing shops that exist that run 3D printers, industrial scale printers, they're working overtime because they can be run. You don't have to have people come together. I was also talking on Twitter, which, by the way, is a good point, Amber, to tell us, please subscribe to our YouTube channel. Give us a thumbs up. This is where you can come for bullish, optimistic, positive news on America 2.0, on New World stocks, and also follow Amber and I on Twitter. Amber, give folks your Twitter handle.
Of course, I can be found at A Lancaster Guru.
And I can be found at Mampilly Guru on Twitter. And both of us are on regularly tweeting. I'm tweeting at all hours of the day. Amber is a little bit more reasonable. However, we're giving regular updates. And the one big theme, Amber, I have to say, is that people are too affected by what the Dow is doing, what the S&P 500 is doing. And when you look at it, those two indices are dominated by essentially two companies whose stocks are still going down. And that is Apple and Microsoft. And both of those companies were driven up by, in some cases, a little bit too much investor enthusiasm based on people's love for their products and buybacks. And so the Dow Jones is not a great indicator, or is actually a terrible indicator for America 2.0 stocks. And so is the S&P 500. So I would tell you that you can kind of stop following what the Dow is saying, because we've gone through the 30 stocks and largely they are unrepresentative in our judgment, in our opinion, of where the country really is today and where it is going. Which is that in terms of the trends that matter, Amber, whether it be 3D printing, whether it be remote work, any number of things, those indices have almost no participation or very little participation.
Right.
That. And so to even, because of the fact that those stocks are really small, you could see those indices go down. You could see those two stocks. To the extent they continue to go down, they will drag those indices down, and it will continue to cause people to fear and panic and sell stocks that are completely unrelated to that. And I was on Twitter and saying, I had a friend tell me that, at least in North Carolina, he said, Paul, you won't believe this, but two houses just sold. And he meant, like, while everything was going on, and they sold for 6-7% higher than what he bought his house for less than a year ago.
Right.
And then he goes, on top of that, I also saw listings for the same price. And it just made me think, well, there's no way that that's being done in the old-fashioned way. That's being done through virtual closings. That's being done through virtual showings. And that's Advantage America 2.0. That's Advantage America 2.0 stocks. So I would tell you that if you focus on the headlines on Yahoo Finance or Market Watch, and you're basing your investment decisions on the Dow, on the S&P 500, or even the NASDAQ 100, or these supposed things that represent the market, I believe you're being misled. In other words, there is a dichotomy here. There is a divergence here between the old and the new world. And the old world is based on, say, store retail that is shuttered. However, online retail is booming.
Yes.
Online retail is booming. Workplaces that can transition to remote work are, let's say, over 1 or 2 weeks going to work out the kinks, and we'll go back to almost full productivity. And to the extent that remote work is more efficient, maybe even higher productivity. If you can transition your activities online, you are going to be able to generate sales, generate earnings. For sure, there is some interruption that's in there. However, America 2.0 companies, almost without exception, are already in that position. They are going to transition to online work, transition to online manufacturing, use 3D printing, use various ways to deal with what is going on, and come out of this stronger, faster, and where they also absorb market share, take market share. So whether it be in media where people are on, Facebook and Twitter and Snapchat or Netflix, or all of these companies are actually gaining share. Yes, they might have like a little bit less in sales, but they are gaining share over other activities because there's more people online right now. And in terms of online work platforms, real estate, you can just go thing after thing, and you can see that life after this will not go back to the way it was.
No.
People will shift to what, in terms of how they do the work, and a significant part of that shift will be permanent. And that is obviously bad for one section of our economy, the old world. However, it is positive and good for another section of the economy. And that's the part that has largely been created over the last, I would say, what would you say, Amber? 15, 20, maybe 25 years.
Yes.
Like I'd say from sort of Amazon on.
Yes.
Amazon on. In other words, Amazon created sort of like the first idea that, of something that today we take for granted: home delivery, being able to unlimited choice online, the convenience of doing things from your home. So when I look at the world from that perspective, which is that the Dow Jones, the S&P 500, the big indices that supposedly represent our country's stock markets, are unrepresented, are not representing an accurate picture of where the world is and where the world is going. And which is why last week on my Bow Profits, Amber, I told people, I was like, when I look at what is going on, I can be nothing but bullish and optimistic and positive. That's my hashtag, BOP, BOP. And people on Twitter giving me a hard time, telling me that I'm delusional, et cetera. And I get it. However, when I think of companies, whether it be Facebook or Tesla or Uber or any of these companies, I can only see that all of this is going to strengthen them. And I'm sad for the companies that are going to be weakened. However, our companies, they're going to come out this shooting out like rockets. And I am still very bullish, optimistic, and positive. And I believe our stocks are going to soar out. For sure, we need buyers to come into the market and bid them up. There's no way, if everyone stays out, that we can benefit from that. Still, the underlying and the underpinnings of America 2.0 still in place and actually getting stronger. And one of my Twitter followers said, "This is America 2.0 on fast forward, Paul." And I agree. I agree. And that's what I really believe it is. So I still think that between what the Fed is doing and how far stocks have fallen, that even some of the old world stocks are going to, as we put it on Wall Street, catch a bid. In other words, between short covering and just some number of people will want to own these stocks and they'll come in. However, I would tell you, and we would tell you, to focus on America 2.0 stocks. And if you're looking for phenomenal stocks to own, right now we are sending emails out asking people if they're interested in buying our True Momentum service. Click on the strong hands above. That will take you to a page that will give you all the details on our phenomenal True Momentum service, which focuses on stocks that are in their first wave of introducing their incredible, innovative products to the market and get that surge of that huge sales growth. Click on the strong hands above, take you to a page, give you all the details on True Momentum. And back to you, Amber.
Thank you, Paul. Great insights, information as always. And thank you to our viewers for tuning into the Paul Mampilly YouTube channel. We wish you a very good week ahead, a healthy and safe week. And until next time, take care.